Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. If you're new here, every Friday I break down the latest news and hottest topics related to cryptocurrency and other innovative tech over a delicious cup of coffee. And today we're talking about ChainLink, crypto adoption, DeFi, and of course we've got a healthy dose of Bitcoin coming your way, so make sure you stick around for that. Like every other episode, though, let's kick it off with questions from the community on YouTube and Twitter. So I'll head over to the good old iPad and get started with those. If you want one of your questions answered in a future episode, leave them in the comments down below or tweet me at Hashoshi4. If you would be so inclined, please do subscribe to the channel as well and hit that little bell notification button next to it so we can hang out every single time I post a new video. So let's dive into the questions. All right, Vittorio Catroni asks, thanks for your videos. I'm not too much into Steem, but from the outside, it's interesting to see the development in the industry because of events like the ones linked to Steem. I also have a question for you for next Friday. That would be today. What is your opinion, the most interesting project related to supply chain, and what are the goals of the project? Now, that's a great question. Quite frankly, I don't have a specific answer for what project specifically is great for supply chain. I feel like there are a lot of protocols that are great to implement supply chain products. I think first and foremost, Ethereum was a great place where people started building out supply chain oriented use cases, and we saw projects out there that started doing proof of provenance for supply chain for diamonds, for example. We had people doing things with supply chain for actual manufacturing and products. I think we're likely to see projects like Ethereum, projects like Cardano, projects like a bunch of them out there. I think we're going to see them being the platforms on which the future supply chain products are built. I do think, though, that there is a distinct challenge in building out supply chain applications with blockchain because, simply put, scalability right now isn't there. The average ERP or enterprise resource planning tool that's out there today is way faster and way more scalable than any blockchain network is today. So I think we have a ways to go before supply chain is widely available on the blockchain, that is. But I do think that tokenization has a huge potential in supply chain because you can keep track of who owns what exact part, where you're buying them from. You can facilitate payment on the chain. You can do all that sort of thing. Personally, I'm not a fan of some of the protocols out there that are more distributed ledgers than blockchains, something like Hyperledger. They talk about supply chain quite a bit, but ultimately, setting up Hyperledger to work across multiple businesses gets really, really challenging. There's a lot of overhead and a lot of technical debt, and I hope that that improves over time. But Hyperledger, I'm not a huge fan of Fabric, but there are a bunch of other Hyperledger projects like Aroha that I think are fantastic, and now those might be worth looking into. So thanks very much for your question, Vittorio, and I will keep you posted if I hear of any better projects out there that are specifically focused on supply chain. El Ernito asks, can you provide an update concerning Plasma, or maybe Omisco, and the situation around Ethereum scaling measures as a whole? There's some confusing news in January, and I haven't heard much since then. All the best. Thank you very much, Ernito, for the question and for the well wishes. In terms of scalability on Ethereum, it is quite confusing. Now, originally, the idea was that you can use Plasma, which is sort of a layer 2, similar to what the Lightning Network is on Bitcoin, to scale the Ethereum chain. So they were thinking about running parallel Plasma chain off the network. And that was how they were going to scale. Then we started to see movement in the zero knowledge proof side of things. And we saw ZK technology like ZK Snarks implemented in the Ethereum protocol in the Ethereum 2.0 spec. Now that came out of Zcash and some of the work that was done within the Loom network, Plasma network, etc. And so it was very interesting to see how that all happened. So now Ethereum 2.0 is scaling based on shards and zero knowledge proof technology and interacting between those sharded chains, essentially. Now, the Ethereum proof of work chain that we have today is going to be held still, the torch will be held by other projects. I think you have the Loom network that still exists. You're going to have the Matic network that still exists, and they'll likely move over to Ethereum 2.0. But I think ultimately you're going to have Ethereum technology and Plasma still functional and still a part of the ecosystem going forward. Whether or not it's part of Ethereum 2.0 is really hard to say. just know that the scalability that's happening on Ethereum 2.0 and where they're looking to go in the future is very much so oriented towards zero knowledge proofs, sharding, state sharing, and all that sort of thing. So Plasma has taken a back seat. Omisko, though, still has things happening. I think they're still working, but I would say any project that's reliant on Ethereum right now is not going to push too hard to build new features for this proof of work chain and the current implementation, because they need to see what's going to happen with Ethereum 2.0. And likely they've already been working on those test nets to start implementing updates to their code and to migrate over. So hopefully that answers your question. It's just as confusing to me sometimes reading all the conflicting reports, but hopefully we'll know more over time as the Ethereum 2.0 situation unfolds. Crypto Hour asks, thinking about unstoppable domains, is it linked to a wallet on their platform, or can you link it to a ledger address, for example? That's a great point. So you can generate a wallet on your own, a Zilliqa wallet, and you can claim your domain. That's basically you claiming it using your Zilliqa wallet or your Ethereum wallet. So for example, when I got my .crypto domain, Hashoshi.crypto, I went in and I used my MetaMask account that I have, and I use it for development, etc. And I use that to claim my domain. So you own the wallet. They don't keep your wallet in custody. As soon as you claim it on their app and you use your key, so your MetaMask wallet, your Zilliqa wallet, etc., to claim your domain, it's now yours. Now, if you want to claim it using a ledger, you can also do that. They have instructions on their website to claim using your ledger, but any Zilliqa or Ethereum compatible wallet for .zil domains and .crypto domains respectively will work. You can do that. It's literally just a digital asset, if you will. It's the same thing as holding a token. So you can absolutely 100% claim it on your ledger, and there are instructions to do so. And if you do want to pick up a domain, you don't have one, I'll leave the link down in the description below. But beyond that, I will also see if I can get the Unstoppable Domains team to send along tutorials for both of those things, and I can link them up as well. Thank you for the question. Kajoro Bitterthorn, interesting name. What are your thoughts on crypto banks and crypto debit cards like Nexo and Crypto.com? Do you think they'll work out long-term and help adoption? And would you recommend a service like one of these to a hodler? Great question. So I'm actually a huge fan of the idea of these crypto financial services institutions, I guess you can call them. Crypto.com is one that I've used pretty extensively, and I really, really enjoy their product. I think they've done a fantastic job of implementing what is a complete solution from exchange to a crypto debit card to a payment merchant, crypto payment acceptance system. I mean, they have a lot of stuff in there, not to mention their earn products and stuff that's oriented towards DeFi. I think crypto debit cards and credit cards, depending on their implementation, are fantastic for adoption, because I think it puts crypto in the hands of more people and makes it more usable. People can relate to having a card where they can spend assets. I also think the ability to make staking clear in terms of its use case is really helpful as well. So people don't like sometimes Crypto.com or other platforms that require staking of an exchange token to get better rates or what have you. I think that's a great use case for tokens like that, because it allows you to actively have a stake in the ecosystem that you're participating in, but it also gives you the ability to improve your product offering based on that stake in the ecosystem. So instead of the bank or institution having to charge you a bunch of fees and make you pay for a lot of things, or quite frankly, just not building stuff that people want, you can say, hey, the people that invest the most in our platform are going to get the best features and get the best benefits. And I think that's totally fair. Now, I'm open to other people's opinions here, and I've heard this debated quite a bit. So what are your thoughts on staking and these sort of like, they're not really exchange tokens, but native tokens for these types of platforms? Now, do I think they'll work out long term? I do. I think that Crypto.com and Nexo and some of these others out there, Uphold, their debit card is great. I think these platforms are going to stick around and they're going to exist because people do inherently want to spend crypto. But I will say we'll probably start moving more in the direction of people using their phones instead of physical cards, because I think that in the future things will be more scalable. People are not going to convert to fiat currency first and then pay a merchant in fiat currency all the time. We'll probably see native crypto payments. So there's that, and we can consider that probably a 2 to 5 year deal. We'll probably see that happen. So thank you very much for these questions. I do think that I would recommend these types of services, specifically crypto.com. I'll link that up in the description below. I think that their product offering is fantastic, and that's a great place to start. Even if you don't want to stake in their ecosystem, there's plenty of things that you can do with that app, and you can use their debit card to spend your crypto if you want to without having to stake. So, fantastic app. Thank you for that question. Ormy4 asks, hey Ormy, how's it going? What are the pitfalls of buying coins that are on exchanges you don't know much about? The added issue of not prior looking into a wallet to store them on afterwards. He said he bought Airwire from IDAX and lost them all as he wasn't prepared. CoinEgg left funds on for a day and then stolen, and no customer support help. Yeah, these stories are very prevalent, and it's a shame. I wish that that weren't the case, because it makes crypto look like a huge scam to anyone from the outside looking in. The reality is that while it's hard to find the latest and greatest, the best new exchanges if you don't try them, I think you're best off reading reviews online, going on Reddit, trying to find things wrong with each exchange. Likely you're going to find fudsters and people that just hate the exchange for no reason. But you can't be too careful, because a lot of these exchanges, even though sometimes they're not purposefully doing something wrong or malicious to take your assets, they just don't have the security qualifications and they haven't built their platform out, especially if it's in beta. There could be bugs and errors. And when the operations aren't solid yet, it's really hard to get an answer from customer support. So I am sorry that this happened to you, first of all, but I also would recommend that you use a well-known exchange, or if you're going to use a brand new exchange, do really small tests first. Don't do KYC on there yet until you're sure it's secure, if it's required. Make sure that you go on that platform, you do small little trades, you put a little bit of assets on there, you make one little trade, and then see what happens. I think you'll be able to tell when things go wrong. Like you said here, CoinEgg, you left funds on for one day and then they were stolen, right? So if you put a little bit on there and see if they get stolen, that might be a good test for you. But it's really, really hard to predict what's going to happen with these exchanges, especially with the smaller ones, the new ones. So look out for reviews online on YouTube. You'll see things on Twitter, and try and go that route. I think that's the best way of evaluating what exchanges are good and which ones are not. So hopefully that helps you. So that'll do it for the questions today, guys. But again, if you have any questions that you do want answered in the next episode, leave them in the comments down below. I try and get to as many as I can. And yeah, you can always tweet me as well. I'm always available. Let's dive into the first story that we had on the books for news. Now, a South Korean bank, a really, really large South Korean bank that is now dipping its feet into crypto. And we have some really cool information about that project. I read a story yesterday about one of the largest South Korean banks, KBDAC. That's an acronym. I don't even want to try the name. But they're stepping into the ring with cryptocurrency product service offerings. And based on trademark filings that refer to digital asset custody, it's implied that the bank is aiming to create a crypto custody service for customers. More details, though, have emerged now, and it appears that the services offered for crypto at KBDAC are likely to include trading services, consultation and advisory services, and storage as a custodian for cryptocurrency. Now, the key takeaway here is twofold. One, this is yet another large financial institution with a large customer base that's bringing crypto to the forefront of their offering. And two, South Korea has always been sort of a duality in the crypto space. It seems to cycle from positive news to negative news to really good feelings about crypto to really bad feelings about crypto within the country. And there's really been little in between. So to see South Korean institutions making crypto a strategic priority is positive news in my book. Sorry, coffee break. By the way, in today's episode, the coffee is again from my favorite roaster, Red Rooster. And they're in Floyd, Virginia. This is a Guatemala coffee with absolutely zero milk or sugar whatsoever, just in case you were wondering. Maybe one day I can get a coffee sponsor for these episodes. That would be cool. So in other news, Coinbase announced that they are now supporting DeFi lending protocols Compound and DYDX, DYDX. I'm not sure if that's how you pronounce it. That will be within their service, so users can lend their crypto for interest returns from within the mobile app. However, Coinbase has made it very clear that they're not really willing to risk or shoulder the responsibility if something were to go wrong. as they're now making the disclaimer that DeFi products are nascent and things can go wrong, so to proceed with caution. I can't really blame them for this either because DeFi is nascent and things do happen. I will say though, I'm a bit frustrated with the rollout because it seems that iOS is going to get these features right now and then Android's going to follow sometime in the future. And I don't really see a date or timeline, so it's kind of a bummer for the large Android population that's out there. I will say DeFi is a place where most exchanges need to go, but it's also a place where I think a lot of exchanges and wallets don't really want to go because hacks happen. If you don't implement things properly, things can go very, very wrong. And I think the average user doesn't realize how complicated these things are behind the scenes, and that's fine, but that does present real risk. So I think that's why we've seen big players, even like Coinbase, not enter the fray yet. They've probably been trying to make sure that they make this as foolproof as possible and de-risk as much as possible. So this topic, though, brings me to another story that I think is notable, and that came out of research done by crypto wallet company Zengo. Zengo recently published a report with testnet research on decentralized application vulnerabilities, and one that is very, very dangerous for DeFi apps. Essentially, when a user interacts with a DeFi app, a smart contract, for lending, they're giving permission to that contract to control the specific ERC20 token funds in their wallet. This permission is at best semi-permanent, meaning it can be leveraged by an attacker in between transactions in certain circumstances, even after the user has ceased usage of that dApp. Now, this vulnerability was documented long before Zengo really presented it, but Zengo made it much clearer, and they're bringing it to the forefront again to force wallets to take this issue more seriously, which they should. There are workarounds though, for example, and Zengo mentioned in the report that Brave Browser and MetaMask, two very popular wallets for Ethereum-based applications, allow a user to select exactly how much of a given token they are approving to access within a dApp. This protects them from over-withdrawal or pre-withdrawal attacks, and there are also efforts to parallelize approval and withdrawal transactions, which leaves a far smaller window for approvals to be used to drain a user's wallet before their actual sanctioned withdrawal is processed on chain. Now, I know that a lot of this is very complicated. I know that a lot of this probably doesn't make a whole lot of sense in terms of how the attack vector is taken advantage of, but I think the key takeaway here is DeFi is still brand new, it's still growing, and smart contracts are not perfect. Even if your code compiles and everything looks good, you followed all the best practices, as soon as real people start using it, or you're reliant on external data like oracles for pricing, you have places where things can go wrong, and Murphy's Law, when things can go wrong, whatever can go wrong will go wrong. That is the way it goes, especially for decentralized applications. So hopefully we will see all wallet providers that offer DeFi app access implementing these necessary fixes and safeguards to make DeFi as secure as possible. Moving on to what I know is a fiery subject matter, but I'm going to brave it anyway. In a Reddit Q&A, Microsoft founder and billionaire Bill Gates laid out a potential idea for managing COVID-19 cases, and I must say the internet has exploded in response to it. On Twitter, I started seeing people claim that Bill Gates was advocating for mandatory human implant tech that tracks health data related to COVID-19. That freaks me out. Upon reading his exact answer on this Reddit Q&A, however, he says in regard to how to control the virus's spread, I quote, "Eventually, we will have some digital certificates to show who has recovered or been tested recently, or when we have a vaccine, who has received it." This to me is a direct reference to digital identity, no question. And this is no surprise because Microsoft and Bill himself are huge proponents of ID 2020, an initiative to bring digital identity to billions of people who don't have widely recognized identification around the world. Now, a part of that research, a singular part of that research, encompasses implantable technology and quantum dot tattoos that can bring identification from a biometrics perspective to people all over the world. And people all over the world are rightly opposed to this. That is terrifying. However, despite what you read online, ID 2020 is not devoted solely to implantable tech, and they are not devoted solely to world mind control. Of course, this horizontal jump to conclusions based on Bill Gates' Reddit AMA conflates a simple statement that digital certificates could be used in the future to track disease with the idea that Bill Gates is advocating for using this pandemic as an excuse to mandate digital identification implants. Could one argue that based on Bill Gates' effort in this realm with the implant side of ID 2020, that he's thinking implants could be the medium for this process? Yeah, sure. You could probably assume that. However, was that explicitly said in that statement? Did he imply that this is going to be forced on us in response to COVID-19? Did he mention ID 2020 and implantable tech in this answer? No. All we have here is an assumption at best. I understand that the idea of implants scare people. It scares me too, and I'm way against it. But creating a conspiracy by way of inference is a dangerous game. We as citizens must remain vigilant to stand against things we don't believe in, but we also have a responsibility to report on and disseminate fact, not inference. Let the record show I am vehemently against implantable tech, except for isolated medical necessities like pacemakers and the like. But I don't think that Bill Gates was implying right now in that Reddit AMA, regardless of all the periphery stuff that he does, that that is what he was saying in this instance. We will see, and if it turns out that I was wrong, I'll eat my words, and I'm against it. So I'm against implantable tech, bottom line. But I think that this has been overblown, and some of the headlines that you're reading out there right now are a little bit misleading based on what was actually said. That's all. Now, something you do need to be worried about right now, though, is the ever-growing list of scams and hacks that are occurring during this work from home period. Please, I'm begging you, be vigilant and remember the golden rules. Do not share credentials or personal information anywhere unless you're 100% positive it is legitimate and only to log into that website or go onto your bank or whatever. Do not share your crypto seed phrase or keys with anyone, ever, nowhere, never, ever, because it's always going to steal your cryptocurrency. Do not click links in emails that are clearly trying to get you to panic and make a rash decision, like enter your credit card information right now so your Netflix subscription doesn't get canceled. These are almost all phishing scams when they're trying to make you make a rush decision. A couple in particular to watch out for right now are fake Chrome extensions for Ledger Live, fake Netflix and Hulu payment emails, and COVID-19 maps that are all ways to install malware on your computer or steal your information directly. It may seem super overboard right now, but you need to treat everything as a potential threat online to make sure you don't fall into the traps that are out there. It happens to the best of us. I too have been in a position where I wasn't thinking clearly. I got an email that I thought was legitimate. It wasn't. As they say, trust but verify. Here's what I do. When I get an email or something sketchy, I stop, I take a sip of coffee, and I do a quick analysis before I do anything else. So here are some examples. If you were to get an email to install Ledger Live as a Chrome extension, one simple Google search will clearly tell you that Ledger themselves does not offer a Chrome extension for Ledger Live, so you'll know it's fake and trying to steal your seed phrase. If you by chance do get to the point where you install that Chrome extension, as soon as it asks you for your seed phrase, know it's a scam. They'll never ask you for your seed phrase, and Ledger Live, the desktop app, never asks you for it either. If you get an email from Netflix saying that your payment information is invalid, quickly log into your app and see if you have a notification. Because if that were the case, you'd have a notification there saying, hey, update your payment information. If you get an email saying to check out this COVID-19 map and that you won't believe what you're about to see, well, you best believe that's malware and delete that email right away. Good personal cybersecurity practices are paramount right now, and it's really important that everyone takes it seriously, especially while we're all working from home. And hackers know you're probably not on a secure network. You're probably distracted doing something else at home, and you're on your computer 24/7, so just be safe. And if you have any questions, I'm here to help. Of course, many of you probably skipped the entire video to this point just to get to this section right here, and you know what? I'm just thankful that you stopped by to watch, so thanks for supporting the channel. Let's talk about Bitcoin now. More specifically, let's talk about a question that I'm getting left and right, and that is now the right time to buy Bitcoin? Now, as you probably well know, I'm not a trader, I don't read charts, and technical analysis that you see on Twitter may as well be in a foreign language to me. But I do know the tech, and I feel I have a grasp of the fundamentals that help me make these sort of decisions. And this is not financial advice in any way, shape, or form. That said, I personally feel that we have braved the initial panic period from COVID-19 and that Bitcoin has sort of settled into a comfortable little space in the 6,000 range. However, I fear we might be in the eye of the storm right now, and that we still have one more big wall of panic to contend with as COVID-19 continues to develop, especially in the United States and in the West in general. I believe wholeheartedly that when we come out of this cycle of recession and panic, that Bitcoin will emerge as one of the strongest performing asset classes along with gold and others. I also believe that Bitcoin is uncorrelated enough now to resist complete price deterioration if the stock market and other asset classes take a huge hit yet again, which according to many analysts out there is still very possible, if not likely. The point here is that the economy itself is not doing well around the world. And since the entry point for Bitcoin is still fiat currency, the volume of buyers and the amount of money people have to discretionarily spend is likely far less than it used to be. You will have people going into Bitcoin and precious metals for safeguards against the bad stock market and uncertainty around inflation, but that alone is not always a guarantee that prices trend upwards as a result. So here's my non-professional bottom line stance. If you have a paycheck or assets unallocated, I believe it's a fantastic gamble still, but a fantastic one to put some of that into Bitcoin in chunks over time. If you get a paycheck, set aside $50 to average in over time. Volatility still remains rampant, and you might catch some nice price dips to get your initial entry point down significantly than if you just dump a large sum of money in right now. I also have to say that for those who are worried about putting food on the table or are overstretching their budget to go ahead and invest in stuff, I promise you this is not a get-rich-quick scheme. You'll read on Twitter like this is a get-rich-quick scheme or that it's a scam and very little in between. But it is not a get-rich-quick scheme and it's not a scam. It is in between. You already have notable people in crypto saying, we will see 100K Bitcoin, and you have to understand that everyone has a motive, but no one has a crystal ball when they say these things. We don't know where Bitcoin's going. No one does. But those who are bullish want people to get into the market because they want the price to go up. Those who are bearish want people to get out and panic because they think the price is going to go down. The halving alone is not going to bring us from where we are today to all-time highs, in my humble opinion, right away. But I'm happy to be proven wrong. I am not a financial professional, nor am I an advisor, and even those who are cannot predict the markets ever. So always be cognizant of what you're risking, and I know it's self-explanatory and I say it all the time, but it really is important. Personally, so that you understand that I'm walking the walk, not just talking the talk, I'm personally investing at tiny increments, $50 every 2 weeks into Bitcoin. And if we hit 50% or we hit 3,000 again, right? We go from 6,000 to 3,000. I will not blink because I know I'm not overextended and my time horizon for investing is years, not months. So I believe that every dollar you put into Bitcoin or other speculative assets for that matter, you have to be willing to leave it there for at least a year, if not more, or else you're putting yourself in a position where you could potentially lose out on that cash. Now, moving into the world of ChainLink, I don't really report on every single partnership they make because quite frankly, ChainLink is working with so many projects, and that's great, but not every single project is unique enough for me to report. However, the latest partnership that was announced is significant, and that's with Kava, a DeFi network that uses the USDX stablecoin to facilitate collateralized lending in the Cosmos interoperability ecosystem. Kava itself is a project that I've been watching and following for a while now because they're taking a really interesting approach to DeFi by allowing multiple blockchains and their subsequent crypto assets to be used as collateral for lending on the network by way of the interoperability mechanisms in the Cosmos ecosystem. This opens up DeFi to way more users and allows for wider use. Now, one huge vulnerability in DeFi products is that pricing data feeds they use to calculate rates and trades and stuff, there have been many instances where exploits took advantage of manipulated or inaccurate price data feeds in these data contracts, these DeFi contracts. That said, ChainLink's decentralized Oracle network is an answer to that challenge of providing consistent, trusted price data feeds into the smart contracts. And as a result, Kava announced that ChainLink is going to be the sole price data Oracle provider for their DeFi contracts. Now, there are a couple of notable things here. First, this just continues to reinforce my previous video's claims that ChainLink is targeting all the interoperability platforms to spread their product to more chains without directly integrating. And by making ChainLink work with the Cosmos SDK natively, this could be a huge move in that direction. Now, secondly, Kava is quickly gaining steam and Chainlink's partnership with them serves a core functionality in their product, which could bode really well for both projects if Kava takes off in terms of active user base and people start really getting into that platform. And then third, the slew of integrations and partnerships that Chainlink has made represent brand new development efforts, and it really signifies that Chainlink is architected brilliantly because it can be integrated with a relatively low effort, at least from what it seems to me, with a variety of different projects and protocols. So Chainlink being flexible and being able to adapt and be malleable enough to fit in with multiple protocols that all work very differently. Tendermint consensus like Kava, or proof of work like you have in Ethereum, or proof of stake in other environments. Delegated proof of stake like in Icon. All of this just means that Chainlink can integrate with all these blockchains, and that's a key value prop for Chainlink. So I'm increasingly excited about Chainlink these days. It's a hell of a project, and it's one that I'm watching very, very closely. So let me know if you're a fan of Chainlink down in the comments below, because I'm really curious to see how many fans are watching the channel these days. As always, folks, please do check out some of the other awesome content on the channel if you would be so inclined, and I hope you have a fantastic weekend regardless. So until next time, guys, thanks for watching. Cheers.